UK Finance Minister Jeremy Hunt delivered his autumn statement and has announced a cut to employee national insurance from 12% to 10%. That's for 27 million workers. He also announced changes to benefits programs, a freeze on alcohol duty, additional business tax breaks, but also a rise in the minimum wage. That's as the Independent Office for Budget Responsibility sharply downgraded its growth forecasts on Wednesday and upped its inflation projections. Now, headline inflation came in at an annual pace of 4.6% in October, its lowest reading in 2 years, but still well above the BOE's target of 2%. Now, let's get more on this with Mike Ingram in London. He is Senior Market Strategist at Active Trades. Thank you very much for joining us today. Right, so we saw the OBR's growth and inflation forecast on Wednesday presented a much bleaker picture than prior projections laid out in March. Why, and what is it telling us for the future?
Well, first off, it tells you the difficulties that all economists are having in forecasting economies in a post-pandemic environment. So, if you look at the US, for instance, many people thought that it would be in recession this year. It's not going to happen. Similarly, in the UK economy has actually been a lot more resilient and growth has been higher than the OBR had originally expected back in March. At that time, they expected the UK economy would actually contract by something like 0.2%. They've actually raised the growth forecast for this year to 0.6%. These aren't big numbers, obviously, but it is an upgrade. Now, the problem with all of that, normally this would be good news, but the problem with all of that is domestic demand has been a lot more resilient. Inflation has been a lot more stubborn to shift, and the Bank of England has had to raise rates far higher than the OBR had originally forecast back in March, which is why their forecasts for 2024 and beyond are coming down lower.
Right. What is the monetary path then, in your opinion, that the Bank of England has ahead of itself when it comes to next year? And also, what's your opinion on the trajectory of the pound, and when opposed to the US dollar, for instance, being very weak these days?
Yeah, I mean, rates in the UK have been on hold since August at 5.25%. In the most recent meeting at the Bank of England to set rates earlier this month, there was a bit of a hawkish tilt on the panel, but the working assumption of the market right now is that we've seen peak rates in the UK. The question is when can we expect a cut and how fast can we expect it to cut? And right now, what the market's thinking is we probably won't see any interest rate cuts until the middle of next year, and maybe 0.75% off policy rates by the end of next year. So rates ending up at something like 4.5%. But as you point out in your preamble, the autumn statement yesterday did put more money into the hands of households. It is going to be inflationary, so maybe the market is going to have to rethink things, and maybe we won't see rates even that quickly.
Mike Ingram, thank you very much for your analysis.